Despite the spin that many in the mainstream media are already trying to put on the collapsing housing market, suggesting that when the Fed starts to lower interest rates, this is going to somehow magically transform the housing market in the United States, which, from my perspective, is somewhat of a pathetic situation or position to take, given the story I'm going to share with you, which I saw come out of Fortune about a day ago, relative to not only the existing inventory on the market, but time on the market. There is such a backlog of inventory, new and used homes in this country right now, that it's almost beyond saving. Again, love to get your thoughts and comments before I jump into the article. Please subscribe, hit the subscribe button if you're not subscribed, so we keep growing the community. It's a free and easy way for you guys to support the channel and our community, so I really appreciate you very much. So new home inventory is at its highest level since just before the market collapse that led to the Great Recession, okay? And they're also saying it doesn't mean it's the same market. We know what led to the housing crash back in 08, 09. It was the whole mortgage crisis, right? Robo loans, all that mortgage fraud. It says the U.S. housing market's inventory is growing, putting pressure on prices and slowing new construction, according to a fresh research report from the Bank of America Institute. As of June, existing home supply reached 4.7 months, the highest level since July of 2016. What that means is it takes an average of 4.7 months for the average existing or used home to rotate through a sale transaction. New home supply surged even further. New home supply in this country right now is sitting at 9.8 months of supply. It's no wonder why the builders are pessimistic. It's no wonder why the forward-looking permits have crashed, right? It's the highest points in 2022, highlighting how quickly inventory is building across the housing market. The influx of available homes reflects sluggish demand. That's one way to put it. With builders citing weaker buyer urgency, affordability challenges, and lingering job instability. Okay, affordability challenges are not going to change overnight. Lingering job instability is not going to change overnight. That continues to get worse. We've done several videos on the state of the job market right now. The Institute noted new home inventory is now at its highest level since 2007, the year before the housing market collapse that led to the great financial crisis. Resi Club co-founder Lance Lambert told Fortune that the rising inventory tells us that home buyers are gaining leverage as slack in the housing market is increasing. I think that's another line of BS, because all it means is that the buyers are becoming more selective. They're canceling escrows and pulling out of deals at record pace and record amounts right now. So it's only truly a buyer's market if these buyers have good paying jobs, good credit scores, good solid payment history, right, on other obligations, which translates into obviously a higher credit score. And basically overall, are they a solid borrower? Banks are tightening up credit right now. Okay, so this is all compounding. To say that it's a buyer's market just because we have a ton of inventory, for me, doesn't translate. Okay, A plus B doesn't equal C there. As always, please leave your thoughts and comments. It says the pandemic housing boom saw too much housing demand all at once. Home prices overheated so fast in many markets, and underlying fundamentals got too stretched. Don't we hear that all the time? Underlying fundamentals in every market always get too stretched, right? Lambert characterized the last few years as a recalibration period. This is mounting inventory, sucks out appreciation in more markets, and even causes outright corrections in home prices. Okay, so as inventory continues to build, more time on the market, you're going to see these prices come back down. Doesn't mean that there's going to be a line of buyers willing, and I should say the operative word, able to actually close an escrow. Okay, we discussed last week on the show about the whole idea of whether the Fed's going to cut in September, not cut in September. Even if they do, this is not going to translate to a meaningful change in the 30-year mortgage rate, folks. I mean, and I think all of you would agree with that. Again, it's more smoke and mirrors. It's more just happy talk. This period is different from 2007, this guy says, because that window saw a far greater weakening of the housing market and upswing in resale inventory, along with unsold, completed, new built homes. Well, I'll tell you this, when you have new homes now, almost 10 months of existing inventory of new homes sitting on the market across this country, and home builders simply giving up because they can no longer keep affording to reduce their prices and throw freebies at buyers. Okay, the median price of a new home now, because of this, has actually fallen below that of an existing home, a reversal of the usual market dynamic. B of A said this pricing inversion underscores how builders are being forced to discount amid rising supply and softer demand. So, I mean, guys, this is says, and this guy does say, and I would agree with this, that the inventory picture, right, is going to vary significantly from, let's say, area to area across the country. For instance, it says it remains most limited across notable sections of the Midwest and Northeast, although still growing. Okay, so meaning that there's a little less inventory on the market in those areas. Okay, but many parts of the Sun Belt and Mountain West, they're seeing inventory pass pre-pandemic 2019 levels. Okay, for now, the data signals a market in transition, high inventory, moderating prices, and builders caught between a cautious consumer and the need to manage supply. I would even, let's say, editorialize and say you have a weekend, in many cases, just completely broke consumers, overextended. The last thing these people are going to be, being able to do is go out and buy a home, a new home, or a used home. The ones that have homes, some of them are struggling to even make their own mortgage payments and pay for all the expenses, taxes, insurance that continue to go up as well. So again, just a bit of an update on the housing issue. I did not cover this inventory in terms of months on the market or months worth of inventory in last week's videos. That data I didn't see it had been made available. So anyway, another metric that shows a disastrous housing market. If for those people that think that the Fed's going to save the day with a quarter-point cut or a half-point cut, even if they do several, half-point cuts, what's that going to really translate to into a reduced monthly mortgage payment? Not a whole heck of a lot. Okay, and of course we know that's not going to really impact the price of the insurance, the taxes, all your utilities, things that you have to pay when you own a home. Won't go too long today. Back in the sweltering 110-degree desert from Kauai. Had a great time with the family on that vacation. Going to get back in the swing of things in the coming week. And as I always ask, please subscribe. Please like the video if you enjoy the content. Leave your thoughts in the comments. And with that being said, I'll talk to all of you soon. Bye.